So, listen, y'all. This is our first week back. How was y'all week, man? You know what I'm saying? How was y'all week? My week was great. First week back. Mm, listen, we caught some good stuff this week, man. No cap. We definitely caught some good stuff. Shout out to Gold, shout out to NASDAQ. I don't know if y'all traded today, but today was NFP and I just sat on the sidelines. I'm not gonna lie, just chilling. We gonna see how next Friday go. I'm not gonna trade next Friday. I want to see just a random Friday that doesn't involve NFP. I need to see like, okay, what are we getting? Because this is a whole new year, and we don't really know what we're gonna get. But so far so good. As far as my week, you said 2-1, green, great first week. I earned $20. Hey, it's a start. Everybody starts somewhere. 5-0. Let's go. Working on risk management. Yes, sir. All right, so let's go ahead and break down these three trades that I took this week. Yeah. So I'm going to take this off real quick. So the first trade that I took was a 15-minute demand mixed with a 13-minute breakout. Let me make sure this is recording. I just want to make sure everything is on point because what I don't want to mess up anything. Okay. All right. So yeah, the first trade that I took this week was on Nasdaq. We took a 15-minute demand mixed with a 13 EMA breakout, and it was pretty simple. Like the 5-minute EMAs looked pretty good. If you go to the 15-minute demand, it looked pretty good. It had a little minor break of structure right here. Like it looked like I can't even lie to you. It was pretty decent. Like I can't really complain about the actual setup. Like I feel like this whole week we took solid setups. Thursday was actually interesting because after it reached a 1-to-1, it came back to break even. That thing went up for the rest of the day, but we gonna get to that trade. So yeah, so this trade 15-minute demand, 5-minute breakout, and that was pretty much it. The previous day on that Friday, last Friday, it did a crazy drop. So, when we look at New York session, like even pre-market, look at what yesterday did and what London did because we could have been on a correction. And I think we were on a correction on Monday. And we just had the direction right. Like it was moving pre-market, and then when it came back at the open, it just like wicked right down to our original breakout, and then it went right back up. So Monday was pretty simple, man. Perfect EMAs. I like when we get perfect EMAs, and also it dropped a nice amount before it actually took off. So yeah, this great. This day was great. Let's go to Tuesday. Tuesday, we took a another 5-minute breakout with perfect EMAs. I just love when the market is trending. Like we win the most when the market is trending strong. Like if we can get the direction right, and we got to be going in a direction where it's more likely to happen. Like when EMAs is perfect like this, I'm used to price moving better than a typical day where the EMAs curl down and we trade towards to the 200 EMA or if the 200 EMAs in the middle, like I expect those days to be trash. But when we get perfect EMAs like this, 13, 50, 200, I'm expecting a breakout or some type of demand setup or, just something that's clean because when the market is looking like this, it usually trends. So yeah, so this setup in particular, it was just a 5-minute breakout on gold. We did have a larger stop loss. So again, control your risk. I do trade on the minis on gold. So my risk be a little bit more on gold, depending on the stop loss size. But yeah, like starting 2026, I did increase my risk. So like again, like when my losses be a little bit bigger, it's just part of just, taking it to the next level. So like I was prepared for 11-point stop loss. Like yes, this is a large stop loss, and we have had a larger stop loss than this. Like this is 11 points, but we done had I done seen us have like a 17, 18 point stop loss on gold. And again, you gotta like use your common sense. If you have a large stop loss, either go on a micro or lower your risk. Don't just like go heavy on 11-point stop loss because that can take out a lot of people. But yeah, so that was pretty much it. We hit buy stop loss underneath this wick. I kind of like this because it looked like a liquidity grab also happened. So if you look at these wicks right there, this candle right here swooped underneath that swing and then closed back above. So that this was like a mixture of a liquidity grab, but I just think perfect EMAs definitely helped this situation right here. It didn't have no 15-minute demand. No, I don't think it had a 1 hour demand or anything like that. Let me go to it. Yeah, no, I didn't have. Oh, no, no, no. I think it did. Hold on. Oh, yes, it did. It had a 1 hour demand right there. Okay. Hold on. Gotta make sure people are muted. Hold on. Let me go to.
You're
Okay. My fault, y'all. Okay. So, like I said, this setup, I thought it didn't have higher time frame influence, but it actually did. But the 1 hour EMAs is actually a key factor on this trade because, when we are trading above the 200 EMA, the 5 minute is usually clean. Like when we're above price, I mean, above the 13 EMA on the 1 hour, the 5 minute is usually creating some type of clean setup or even breakouts are winning when we're up in this area. So yeah, this is actually looking pretty good. I didn't even check this out when I took this setup that this was at a 1 hour demand. Like we were just coming off of a 1 hour demand because that is confluence. Like if we find anything on a higher time frame and you go in that same direction, that's added confluence. So actually this breakout is actually pretty quality far as a Tuesday setup. So I feel like overall like this week we were taking great setups. Like, like when the EMAs are perfect, most likely the 1 hour we're trading above the 13 EMA on the 1 hour. When the 5 minute EMAs are perfect, that means we in a trending market. Usually we get some nice movement. All right, let's go to Thursday, the last traded day, which was yesterday. Now, this trade right here, man. Listen, man. This trade was very interesting, man. We definitely had a direction right for sure. A lot of people thought that it was gonna go for sales. Some people did take sales on the call yesterday. I'm gonna keep my like when when I'm trading and I choose whether I want to trade towards the 200 EMA or go away from the 200 EMA, I need to see what structure is telling me because when I first looked at this, I'm like, yeah, a breakout for a sell is happening at 850, but look at the structure of this. Like this looked like an inverted head and shoulders. Like that was the first thing that I saw, and I'm like, okay, we got this little 5 minute demand zone that broke this swing and also broke this swing, but we still got to get past the 200 EMA. So I wanted to see if they was going to hold at this 5 minute zone. If they held at this 5 minute zone, I was going to wait for a breakout, and that's what I did. So they actually kept wicking the zone. No candles closed inside of the zone. Okay, like that's another key factor. No candles closed inside of the zone. So we got like 5 wicks, like damn near 6 wicks in this 5 minute demand zone, and then they finally close above. So I'm like, okay, well let's take the setup. Now as soon as we get into the trade, immediate drawdown. Now our stop loss is much smaller than Tuesday's win. We got an 8 point stop loss, so that was pretty good. But my whole mindset is I don't want to give back what I just won on Monday and Tuesday. So I always say this, like, if you have a good Monday and Tuesday, going into Thursday, just lower your risk. So if you do take a loss at the end of the week, you're not gonna trip about it because you're not trying to eliminate multiple winning days. Somebody DM'd me the other day and said that they gave back all profits from Monday and Tuesday on Wednesday. And I'm just like, you're risking too much. Like you should never one loss should not wipe away multiple days. That means you're risking way too much or you don't even know what you're putting on. You just hitting buy. Please, like anybody that's brand new, you need to understand how gold moves per point. Okay. This is this rough. Let's just say this is a 9 point stop loss. You need to know how much you want to risk for 9 points by the time it actually the candle closes above the 13 MA, or have like a rough estimate of what you will want to lose on this trade because I just don't want nobody taking these trades and then we finally lose the setup and then you just wipe all the gains. Like you got to control your risk. Like risk management is important. Like that's the only thing that's gonna keep you afloat long term. Like I don't want nobody blowing on accounts. So yeah, other than that, I hit buy stop loss underneath that wick right there that closed above 13 MA. We played around a little bit. First target got hit after 20 MA, and then I moved my stop loss at break even. It wicked me out, and then this thing absolutely ripped. This is going to happen. I'm not going to lie. Like I wasn't really too upset because I didn't lose at all this week. But be prepared for stuff like this to happen. Like it does happen. Now, if you have conviction that you want to minimum, like you want to go for a 1 or 2 minimum, just be careful because every single day is just not going to always work out like this. Now, this whole week, all of our trades hit for 1 or 2 or more. Okay, I'm telling you this right now, like so you won't get your hopes up that okay every trade is going to go for a 1 or 2. Like no, it's not. This just was a great week. Like every trade that I called out went for over a 1 to 1. Is that happening every single week? I promise you it will not happen. So still follow your rules. First TP 1 to 1, second TP 1 to 2, third TP 1 to 3, and whatever else you want to do far as a runner. Like most of the time on a call, like depending on how small our stop loss is, I may go for a 1 to 3. It just really depends on how small our stop loss is and how fast price is moving. But like after 1 to 3, you kind of just I would just walk away and just move stop loss to like a 1 to 1 and then just walk away because I'm not gonna just be like, say if I was to hold this trade and I just want to just hold it for the rest of the day, I'll just like get off the call and then just check up on it because I'm not gonna just be watching this the entire session. Like I hope somebody did catch a runner on this. If y'all did, good stuff. Because we did like after it triggered me out of the trade, I just ended the call. But yeah, that was pretty much it, man. Like I said, this week was pretty good. I'm expecting January to be great. We definitely did that. Overall, as far as just getting the direction right. Like I feel like scalping, you got to focus on getting the direction right because they're only going to go in one direction. Like if they're going in two directions, that means you're in consolidation. So if you can get that first initial decision correct, then you're going to have you're going to have a good year. You feel me? Let me scroll up. When we enter the 1 minute, do we still look for a 1 and 3? I mean, if you want to, I will go for a minimum 1 and 2 on the 1 minute. But yeah, that's just me though. Like, of course, on the 1 minute, you can catch a 1 to 3 easily, or a 1 to 4, or 1 to 5. But obviously, you gotta be in the correct breakout because when the 1 minute plays around, you're not gonna have enough time to cut your loss on a 1 minute. Like it's you gotta really just be like, okay, I'm going for a 1 to 2. Like I'm not trying to get out at a 1 to 1 or anything like that. How do you decide when to add contracts? It really just depends on the confluence of the setup, the EMAs, the location of the EMAs. Like, let's just say, a breakout is happening and they're pulling back to the 13 EMA, but the 50 SMA is like right there. Like, if they reject that area, I may add some contracts. Like, it just depends on the reaction because like yeah, you wanna hit buy. Like, say if I took this trade right here and this next candle start pushing down and you want to just add to it, like yeah, you could hit another buy right there or another buy right there, but you don't want to just keep buying closer to stop loss. Like at some point I will stop. Now say if we get another candle that wicks it like this 930 candle and then start pushing back up. You see how this candle right there at 930 pushed down at the zone and then push right back up to entry? I'm going to add something right there as well because that's just another sign that they don't want to go down. And especially if they close like this too, that's just another good candlestick pattern for me to add to the position. But I'm trying to add before I get past my break even. I don't really want to add up here. You know what I'm saying? Because I have to go for more. So I really want to be adding when I go into drawdown or I get a reaction at the 50 or the 13, something like that. Because most of the time, like our breakouts usually do a retest at the 13 EMA. Like it hit the 1 to 1, come back to the 13 EMA, and then rip. Like we done seen this so many times. So I would probably say if you want to add two positions, see the reaction at the moving average, and if it is rejecting it, then I would probably add. But don't add after break even. Like if you're adding into profit, like now you have to go for more. Like add when you're in drawdown. Like that's what I would do. That's what I've been doing. So yeah. Let's go ahead and take this off. Yeah, like I said, this is a good week, and I'm expecting next week to be pretty good. Doyle, you still use a Hango trade, man? Come on, bro. How can I deal with losing confidence after losses? Um, I mean, again, losses is just temporary, but you got to know that it's temporary. Like I feel like because even when I go through losses, I still, I still feel like I know what I'm doing. I've made a lot of money. I feel like you need to have some proven results for yourself to know that you know what you're doing. If you haven't had any results, then of course you may like lose a couple of confidence because you haven't made anything. Like if you haven't had a payout anything, then you don't know this stuff is real. So like I feel like you need to get a payout, get you some withdrawals so you can see like, okay, I know what I'm doing. I'm getting some type of results. Like people need to experience the payout and the withdrawal so you can at least feel like you know what you're doing. Like if you just because at some point like I stopped compounding my account. Like I'm just like, all right, I need to start taking some money out. Like I've been doing this for some time. It's time for me to see some of this. So do the withdrawal. Let it hit the bank account. Get some confidence from that. All right, let's go ahead and I know people got questions. Let's go ahead and answer some questions. We're gonna start from the top. Let's go. All right.
What's up, Doyle?
Yo, what's good?
Can you go to Silver on Wednesday at 10 a.m.? There's a breakout for sale.
Silver on Wednesday. Okay. At what time again?
10 a.m. So there was a breakout, but it like at 10 a.m., but it barely closed. Like it
Oh,
barely
okay.
closed below.
Hmm.
So I didn't take that one. I ended up taking the next one right next to it, and I lost. So I was seeing if a breakout like barely closes beyond the 13 EMA, would you have taken that or no? Or
Wait a minute, wait a minute. How did you lose?
oh, I didn't take that one because it barely closed below it. So I passed up on it and I took the next one.
You took this candle right here at
No, I didn't
10:05?
take that one. I passed up on it because it barely closed below it, and then I took the one at 10:40 and lost because it closed like it was a
Oh
stronger
yeah.
close. So I
Okay.
was seeing like when it barely closes, would you still take it or what do you do in that
Yeah, I
situation?
would I would take it, bro. I'm not gonna lie. Like say if you was like a little bit kind of cautious about this one,
Mm,
if this one still stay underneath, take that one and then just use the first one as your stop loss.
mm-hmm,
Like I would take this. The thing is when price finally start to break past the 13, of course we want to see a certain type of candle, but you would be surprised the type of candles that would still win as we close underneath the 13 MA. So yeah, this one definitely look a little bit kind of iffy, like I don't know. But if they stayed underneath after pushing up, you
mm-hmm,
can get in on that one and just have your stop loss right there and just let
mm-hmm,
that one go. But yeah, I think this one over here, it definitely just lost steam. Like it was just ready to reverse. Like the trend was pretty much over.
mm-hmm.
But what was your question again? I want to make sure I answer your question.
Yeah, that was the question. Like, would you have taken like when it barely closes above the 13 minute or below? Like, do you still take it or do you wait on the second? That was my question. You kind of answered it already, though.
Okay, yeah, yeah. I would take this. I would take this for sure. Because look at this pattern right here. Like we got to understand candlestick patterns. Like, okay, we got a green candle with a long wick, and then we have a larger bearish candle right after. So
Mm-hmm,
that look kind of somewhat like a bearish engulfing, but also this long wick right there is important as well. So if I see those two candlestick patterns off of a breakout, I kind of like that. Like that's just giving me a sign that sellers may be in control temporarily right here, and
mm-hmm,
they were. So yeah, I would definitely just take that 10 a.m. candle close. Like I would take that for sure.
mm-hmm. Okay. Now another quick question. It was on gold on Tuesday.
Let's go to gold on Tuesday,
It was 10:30 your time. It was a breakout for a buy.
10:30.
Yeah, it's a little bit more up. Yeah, I see. I lost. I think is that a little bit too high? I think it was just too high. I wasn't ready yet. It didn't pull back enough. But there was a 15-minute zone. That's why I took it because it tapped the 15.
Let's go
But
to
then it
let's
retraced deeper.
let's replay it because I want to see where is it at this very moment. Let me see. Okay. Yeah, this is a little high. And I only say it's a little high because look at how fast y'all got up there. So like this is 10:25 and then this is 8:30. So in 2 hours, we broke multiple swing highs, creating gaps. Both of these are demand zones too. So this is a demand zone and this is a demand zone because they both have gaps. So buying right here, yes, you are pretty high. Look at how many breaks of structure after the 200 EMA was tapped. So over here, it tapped it, minor break of structure, this swing, obviously these swings, and this swing. They pulled back, another break of structure, another break of structure, and another break of structure over here. At some point, they're going to like I feel like we like last week somebody asked me like when do you know if a breakout is high? Well, how long has the trend been bullish? Let's just zoom out a little bit. It's been bullish for quite some time actually. This is actually, back-to-back days of it being bullish. So, you want to try to get in off of the pullback and not just buying high. Don't get me wrong, the swing high is over here, but let's look at this on a higher time frame because I'm pretty sure the higher time frame will probably say something. Let's see. What is this? Is this a demand zone right here?
Yeah, that's why I took it. It just barely tapped the 15-minute demand. That's why I took it. Or else I wouldn't have taken it. Like 'cause you said it was high.
Okay, let's mark this up. This is a 15-minute demand zone. Did it tap?
Like it was very close. It like you have to zoom in. I think it did. It may be different on your chart, but it like just tapped it.
Yeah, it looked like it just wicked it. Let's go to the 1 hour. Okay, yeah, the 1 hour is ex overextended because it's been above the 13 MA for some time. Yeah, my advice on setups that's just too high far as breakouts, I would just pay attention to the gaps that's nearby. And if it's too many gaps nearby, just pass up on it. I definitely feel like that this setup is a little high, but it do have 15-minute confluence. I'm not gonna lie, it do. But again, gold been bullish for multiple days. So like this day on Tuesday and Monday, it's just been like you see how deep this retracement is right here on Monday, and
Mhm.
then you see how this breakout that's kind of not that great rips for something absolutely just crazy. It's because they had a deep retracement. So when you see deeper retracements, breakouts work better. Like you see how far it is from this swing high over here
Mhm.
versus um this breakout right here is kind of like we already kind of high. The
Yeah.
deep retracement was in this area actually. So really the best opportunity was either this one over here or even this one over here. And this is what I took. I took this one. So, again, how many breakouts have already worked out? How many times have they closed underneath the 13 EMA and then closed back above, especially with perfect EMAs, because the higher they go, the more dangerous the breakout is. So yeah, I definitely feel like this is a little high for sure.
Okay.
Yep.
All right. Appreciate it. Thank you.
Yep. No problem. All right, let's go to the next person. We got Andre right here.
Yeah, it was good doing.
Yo, what's good?
I want to go over this two setups. One that was a loss. It was on a Wednesday. It
On
was
on what?
on gold. I thought.
Okay, go on Wednesday.
Yeah, it was a supply. Everything looked good. It had a breaker structure, and it was a like it tapped around right before 9.
You talking about this one right here?
Yeah, that one right there. Yep. I got in break of the candle, and I just got cooked.
Yeah, this is definitely you getting cooked. Let's go ahead and mark this up right here. So let's look at the higher time frame.
hmm
Because this setup, yes, we have a breaker structure. It looks beautiful. Let's replay it because it probably looked more better just
The
replayed.
EMA is aligned too. Like I had like the 200. Like everything was looked good to take it.
Yeah, let's go to the 15 minute. Let's go to the 15 minute. Okay, the 15-minute 200 EMA is flat. Let's go to the 1 hour. What's the 1 hour doing? Oh, the 1 hour still look bullish. Okay, let's go to the 4 hour. Oh, the 50 SMA is right there. Bullish. Okay, so I feel like this probably lost because of the 4 hour moving
Mhm.
averages being right there. Let me put a horizontal line right there at that 200, not the 200, the 50 SMA on the 4 hour. Let's go back to that 5 minute. Oh, look at that. I feel like other time frame EMAs we got to take into account. Like when I look at the 1 hour 200 EMA, like I want to see, okay, is if I'm taking this breakout for a buy, is the 200 EMA right there at the bottom on a 1 hour? Like I want to see if it's right there because like moving averages is like ping pong effects. Like when we reach a 50 SMA on the 50 the 15 minute, if it don't break that, we're going the other way. And we scale down to get an idea of what's happening within that
Mhm.
moving average to see what price action is saying. So I definitely feel like this 4 hour it retesting right there off of that 4 hour with that 50 SMA definitely played a role. Let me fast forward. Yep, it literally just and then it reacted off of it again. Let me go to the 5 minute. Oh yeah, this one right here. Yeah, it just reacted off of it again. So yeah, I would say definitely be careful. Even like the thing is, the 5 minute could look perfect, but you need to look at the higher time frame. So if I'm looking at the 1 hour and I'm like, okay, what is the overall direction on the 1 hour? Um, hold on, is that a this is an older demand, but let me see.
Yeah.
Hold
Well,
on. That
what I
might not.
like when I was taking it, what I was like, I seen the EMAs on a higher time frame, but what I thought like the 5 minute really makes the 1 hour and stuff. So if it
Hmm.
was gonna break through, I seen that like maybe I get a little 101. Like I
Hmm.
thought it should be good. Like if it was like like a random Tuesday that you're trading, you see that setup, like
Hmm.
would you take it or you would look at the higher time frame, would just be like, nah, like I wouldn't take it. Which,
Me personally, if I see this on a 5 minute at 8:30,
mm,
I would probably take it. My only issue is I definitely feel like I'm already kind of low. And I say that because
yeah, it is low.
look at where the 200 is at versus look at where the 200 is at over here. The 200 is all the way over here. So again, the further we get away from the 200, the more likely a reversal is about to happen to go back. And then this is the time to look for some sort of breakout or a supply setup up in these areas to catch this move. They may do another pullback to the 13 MA, but they're not going to just keep 13 MA go down 13 MA. Like the market not going to keep doing that. So that's why I get kind of like, okay, where are we? Where did London session? How much did London session move? Because when we go into New York session, I don't want to just, go in the same direction as London every day. And that's the difficult part about scalping is you got to figure out whether the market wants to actually do a correction in New York session or they want to do a continuation. That's what we're trying to decide every single day. So like it be kind of like I feel like these EMAs be bait when it looks perfect all the time. Like that's why I always got to look for reasons for why a setup could lose. So this one in particular, I definitely feel like the 50 SMA that's cutting through right there on the 4 hour is definitely playing a role on why they was ready to reverse. Because
Hmm.
again, what else information you have? Now I am looking at this 1 hour though. This 1 hour demand, I don't know, man. Like it looked like they wanted to react off of it right here at 10 a.m. on that Wednesday, and they just tapped it right there, and then you see how this breakout won right after it tapped it. Like this is what we want to see as far as if we want to mix higher time frame confluence with these breakouts. So we got to tap off the 1 hour demand, and then you would take this breakout for a buy, and you would ignore this right here. You would ignore this little
Yeah.
supply because we had a 1 hour demand. So again, when we want to talk about quality with supply and demand, we will want a 15-minute confluence. We will want a 1 hour. But if we don't get any of that, then this is just a regular 5 minute setup.
Mm-hmm.
Are these high quality setups? No, they're just
Mm-hmm.
5 minute setups. So this will be categorized as like a C plus setup. It's not really A plus or bad. It's just like this is standard. Now, again, when you want those best setups, you definitely
Mm-hmm.
want to see the 15-minute or the 1 hour going in your
Hmm.
direction on your 5 minute entry. But yeah, I probably would take this, but depending on how far I am, I would probably pass up on it and just see what happens after 9 o'clock. I feel like volume do picks up after 9 o'clock for gold. And yeah, that's pretty much
I
it.
had one little other setup. It was a win. Like you're talking about high quality setups, like
Hmm.
setups. This setup right here, I want you to like rate it. I think this is like a A plus. Like it was on Asia on Thursday, and then it was a 1 hour demand with the 15-minute demand, and I took a breakout out the zone, and it went for like a 1 to 2. It was
On gold,
on gold, a Thursday night Asia session. I got in like right before 9.
9 p.m.
Yeah, 9 p.m.
Okay,
Thursday.
Thursday. That would be what 2100, I believe.
Yeah, that 5 minute right there.
Okay.
Well, you see, there's a 1 hour. If you go to 1 hour, there's a 1 hour. There's a 5 minute, and they rejected like really good.
Let's see. Okay,
Like,
yeah.
is this like an A plus setup?
Let
And I
me.
just got my 1 to 2, and I just got out.
Okay.
So
Okay. Yeah, definitely a 1 hour demand. Let's go to 4 hour. Uh,
just a
okay.
little like
4 hour
going back
definitely
up.
just crossed. So again, like we gotta look at everything. So the 4 hour just crossed EMAs and we retested the 50, and we're trading above the 13 EMA on the 4 hour. So that's pretty good. The 15 minute, maybe the 30 minute look a little bit better now. Maybe the 1 hour. Okay, so yeah, this is just a 1 hour demand
There's a
with
5 minute zone.
with a
It's like
five
a
minute
good
zone.
one.
Um, again, so the difference between this type of breakout versus those breakouts that I usually lose on when it gets to the 50 SMA, the difference between these two is that we have a far way to the 50. Okay, so a lot of people be like, okay, the EMA is crossed. I don't want to take the breakout. The only time the breakout really fails when say if we do a breakout right here, like say if it was just an imaginary green candle right there and it breaks out right there, how many times have we seen this setup lose? We've seen it lose a lot. Okay.
Mhm.
The only time it doesn't like it performs better is when we get that tap on the 200 EMA and then that breakout, or price is it drops so much that the EMAs are so spread apart. So like the 13 EMA is far from the 50. So this breakout is good. This is definitely a good breakout for sure.
How about the demand, the 5 minute? I marked it up too. I was gonna get in break of the candle, but I decided to wait for the breakout.
Let me see. You talking about this
Yeah,
one right
that
here?
that one, yeah. Because it I marked it up just in case, and it literally just tapped it, and then it did. Then I didn't want to get in too early because it was deep into the zone because they could have just kept going down. So I just
Hmm.
waited for it to go out the zone at least, and it went out the zone. I took the one or two, and that's it. And it literally went up for a one or two and went down.
So yeah, this being a 4 hour zone, I would definitely try to scale that down for sure because this whole zone is the 4 hour demand. So this 5 minute, that's something that I would use to add to confluence with this breakout. So yeah, this is definitely good. The 4 hour demand, 5 minute demand, 13 minute breakout. This is pretty good. Like you and also again, people ask me, okay, what candlestick pattern do you want to see at your breakouts? Well, we got a bullish engulfing right here. Like this is what you want to see. Again, price when price creating gaps, that's when it moves fast. So when you see that it created an engulfing and then the next couple of candles don't even fill in that gap and it start going up, you're in momentum. Just like over here, it breaks out over here, stalls out, and then we get a big momentum candle, and it doesn't fill in the gap, and it leaves a gap. Now look, now price is moving fast. That's why
Hmm.
when I see price constantly keep creating gaps as we're in a trade and it's moving up fast, then that means we are in a solid breakout. So like, yeah, this is good. Like this is pretty good. Like I like to set up. I don't really trade Asian session that much. I do want to test it out this year though, because
Gold is really good in Asia. It's been like it's just a smooth chart. Like there's no like spikes that you see in New York, like stuff like that. It's just smooth. It goes up and down, no spikes. Just
hmm
pretty good. So if you should try it out. I'll
yeah.
wait till the open. Like I would get on the chart like 7:30,
hmm
just to mark it up and wait till the Asia open and then trade after like 8. So it's pretty smooth.
Okay, yeah, I'm definitely gonna check it out for
But
sure.
all my trades usually come after 9. It's weird. Like I'm on the chart 8, but all the like you just gotta like let it pass. Like don't rush because I used to rush and try to take it like right before the open or like 8:15, 8:30, and
hmm
then it would just cook. And then by 9 o'clock, it just quality setups. Like after 9, like so you just gotta be patient in Asia.
Okay,
There's momentum
for,
throughout
sh-
the night.
for sure, for sure.
All right,
Yes,
that's all I had. Thank you.
yes, sir. All right, let's go to next person. You got Anthony Vargas. This is a good setup. Like this
What's
setup.
good, fam?
Yo, what's going on?
Chilling, bro. I got a question on the setup that we took Monday on Nas.
Okay, let's go to it.
So I watched your YouTube video today, and I
Mm-hmm.
seen that when price was going to get to drawdown, you added to your position, and
Mm-hmm.
then also when price came back to break even, you added to it again.
Mm-hmm.
Now I know you did go over it a little bit in the beginning, but I just wanted to like see your reasoning behind taking it in the setup.
Okay. All right. So let's go ahead and hit the replay mode. So this trade, obviously, we took this on live stream together, and this was also influenced by the 15-minute demand. Why did I actually want to add as we went against this trade is because I went in very light on my first entry. So when I'm trading micros, I'm I have a set amount of contracts that I want to use, but I don't want to go all in on the first entry all the time. It really just depends. Like, say if we have a smaller stop loss, I'll just go all in on that first entry. Like, I don't really need to go like all in because we have a small stop loss. Now, let's just say, like look at this. We have a 23-point stop loss. This isn't as crazy of a stop loss because it's Nasdaq. Like, but if we get a 23-point stop loss on gold, definitely going in lighter, and I may hit some more entries as it goes against me. So I feel like when you want to add to positions, like I said before, you want to add when it go against you. Like I was buying contracts when we were going up in this area. I'm like, okay, let's buy again. Okay, price are pushing back above a 13 MA. I'm buying again. And I want to do this because I want to see what price is doing at our initial breakout. These are breakouts, y'all. Like I don't want to be playing around too long. So if you show any type of candlestick pattern or anything that shows strength in our direction, I'm gonna just add to it. So I did like the EMAs. We did pull back. I were looking at this area too. Okay. I'm looking at the gap that the breakout created. So like I'm like, okay, when this candle closed, it created a gap. We start pulling back. I'm adding to fill in that gap. Now, if we break this line area, that stop loss hit. We probably lost. So I was focused on, okay, if this area stays intact and it started rejecting, I'm going to add to my position. So that was really my mindset on this setup in particular. The breakout created a gap. It started to pull back to fill in that gap, and then it ripped for more. So when it did that little retest off of that gap, and we started trading back above the 50 SMA and the 13, I just felt the need to add to it. Obviously, I didn't put all of my contracts in on that first entry, but that's what I'm looking for if I want to stack a position because again, I don't want to be adding when we're already into profit. I don't want to do that. That's just me. A lot of people still do it. I don't like to do that. I like to just add where I want to add at when I'm in drawdown. So when it's time to get into profit, the gains are way bigger because if anybody really watched the video, when I was in this area, I was in $2,000 drawdown. Like, go watch the video. And then when we got back in this area, I just added. Now I'm at like 170 contracts on a micro. And then I go into profit and I'm already at 4K in profit right here. That's not even at 1 to 1. So I feel like, again, that comes with experience of just seeing, like, okay, taking a bunch of breakouts, understanding price action, how candles print, and understanding EMAs. I feel like a lot of people still don't understand like the purpose of the EMAs and why it reacts. Why do we use it on most of our setups? And also understanding gaps too. I'm looking at the gap off the pullback just to give me some confidence to get back in for some more. So yeah, that was pretty much it. If that gave anybody some clarity on why I actually added to the position when it was going against me, and when we went back to break even, I added because it's just all about the reaction at the 50. Like, okay, we closed back under the 50, but now we're pushing back above the 50. Okay, cool. The 50 is it plays a bigger role than we think it do because most of the time when we lose, it's because of the 50. The 50 holds, we lose. But let the 50 actually break if we trying to go past it. Let the 50 actually, cooperate with the 13MA. We usually it gets something like this. It start to rip. So yeah, that's pretty much my answer to that. Like I really just want to see what type of candlestick we get when they fill in the gap on the breakout, and also what type of momentum comes in after we get back above the 13MA. Because once we trade above 13MA, we just gotta just hold price until it gets to our target. I don't really be tripping like when we get into this area, like even next week when we start trading live on the live stream next week, when we start being in these areas in our trades for a buy or even for a sell, I don't really be tripping that much. It's when the 50 is in the way, is when we're having a hard time staying above the 13MA. Like, but when we get these momentum candles, I really just be chilling because like if you really back test this stuff, you'll start to see that this stuff happens over and over and over and over. And all you gotta do is just be patient. Like, you know what I'm saying? So yeah, that's pretty much it, bro. That's pretty much
Yeah, no,
it.
that did help a lot. And now a follow up to that, right? Would it be useful to look at the 1 minute while we're in a 5 minute setup? Because I've noticed, at least this week, like you said, price will fill in gaps to either push up towards, take profit, or to push down to hit your stop loss. So what do you feel, how you feel about looking at the 1 minute to see where it's at in EMAs while we're in a 5 minute setup?
Yeah, like I feel like that we've been talking about that for a good minute last year. That you do want to gauge the 1 minute. When I was in this trade, let's take all this stuff off. When
Because
I
I,
was
cause
in
I
this,
noticed, my bad.
go ahead, bro. Go ahead.
No, I'm saying because I noticed, like you said this week, like on the 1 minute, price will fill in gaps, and you could probably use that to kind of add to your position, seeing the
Hmm.
1 minute structure.
Yeah, facts. So this is the breakout that we took on the 5 minute. But if you go to the 1 minute, you can find ways to scale in and have a tighter stop loss. Now, again, you're gonna be mixing 1 minute breakouts with 5 minute breakouts, but we need to see what's happening within this breakout. So this is where we're buying at, right? This is our entry right here. Okay. On the 5 minute. And then it does another breakout right here on the 1 minute. If you want to try to scale in and add to that position, look at it on the 1 minute, get in for a buy right there, and put your stop loss underneath that 1 minute. That's another way you can scale in because look at how perfect the EMA should start to form as the 1 minute start looking perfect. Once the 1 minute start looking perfect, the 5 minute is just gonna start moving. So this is how the 5 minute will look if you was to scale in. Like your stop loss is not even the 5 minute stop loss. It's the 1 minute. So of course this only gonna work if we're in a strong trending day. Like let me just say that if it's not trending strong, this is going to fail. But if it's trending strong and you can find a way to see another 1 minute breakout within a 5 minute, yes, that's added confluence. And you want to see perfect EMAs on a 1 minute just to see how strong the trend is. Because most of the time, when the 1 minute EMAs are perfect, price is trending very, very strongly. But when the 1 minute is not perfect, it may stall out for a little bit, or the 1 minute EMAs is just not going to look perfect at all. It's just going to just look ugly, and it's going to take some time for it to actually even hit 1 to 1. So yeah, looking at the 1 minute is definitely I would recommend it. Like I was looking at the 1 minute on those gold trades. I really didn't look at the 1 minute on this 5 minute setup too much. I was just trying to just keep it simple because this is my first day back. I wasn't trying to like overcomplicate my decision making this week. So yeah, but definitely keep your eye out on the 1 minute because the 1 minute it will tell you some information whether a trade is stalling out, whether momentum should be coming in or not. Like I definitely recommend looking at the 1 minute for sure.
I appreciate that, fam.
Yes, sir. All right, let's go to the next person. I got AP right here.
Yo,
Yo, what's good?
yo, what's up? Yeah, this is a two-part question I got. So, the first part is like, how do you deal with adapting to the market on a setup standpoint? Is it like every week or like basically like every month? Like for example, like what if you like AMA Breaks was doing you well, all good, like last month, and you just really haven't been seeing supply and demand. Like
Mhm.
going into that next month or like the next week, would you still like be open minded to both, or would you just still stick to what was working for you previously?
Um, I'm definitely open-minded to both. Whether I had a profitable week or not, I'm still open-minded because I feel like in December, supply and demand was doing pretty good before we went on our break. In October and November, breakouts was cooking like it was cooking crazy. But this week, I was kind of using both. I'm using 15-minute demand. I'm using 5 minute breakouts. I'm kind of like mixing both. But going into next week or next month or in the next quarter, I'm always going to be open minded to what can happen because we're gonna get some different type of stuff next week. Now, that's why I try to keep it simple by just looking at my everyday instruments. So again, I'm only looking at gold. I'm only looking at Nasdaq. My main time frame that I'm going to be entering off of is the 5 minute, and we're only going to be using supply and demand or breakouts. And I want to see the my EMAs look a certain way, and that's pretty much it. When my EMAs don't look perfect, and when we trading towards the 50 SMA, that's when we lose the most. When the 200 EMA is flat, that's when we lose the most. Like I already know that in the back of my head. So every time when the 13 and the 50 cross and a breakout is happening, I know that these are lower quality breakouts. But when we get perfect EMAs, it's a high likely chance of us winning with a runner. So constantly keep using the same strategy over and over and over. It's just the same stuff every single time. Like I like to look at the losses in the Discord channel just to see like, okay, this is what we keep losing on. All right, so when I see this, either lower my risk or just don't trade at all. And I'm like every single week, that's all I'm looking for is those things that just constantly causes me to lose money. That's it. Like I don't reach out overcomplicate. Like, okay, is this week breakouts gonna work out more or is this week supply and demand gonna work out? I don't really care too much about that. I'm trying to see, okay, how well my EMAs look. We're trying to avoid news. I'm trying to see what happens after New York Stock Exchange open and just go from there. But as far as like trying to pick and choose what strategy to use, I just keep it very simple. Breakouts, supply and demand. That's it. Whichever one is appearing, I need to see added confluence on different time frames. If different time frames ain't saying nothing, but we just keep taking 5 minute setups, yeah, I may do that, but is it working out for that week? Because if it keep not working out, then we gotta make a slight tweak. The only time I make a slight tweak is when we're constantly losing. Like that means something is actually changing, or we need to switch something up. Like I would say like give it like 2 weeks of just constant losses. Then it'd be like, okay, something got to change because this month breakouts aren't working that good, or supply and demand not working that good. But I'm not trying to like like this weekend, okay, since we've been trading breakouts, I'm only going to use breakouts next week. No, that's not the case. If we see a supply and demand setup, I may take a regular break of the candle on the 5 minute, like a typical setup. Like you got to be flexible every single week. Like I'm not gonna try to overcomplicate this because I don't want to take no losses. I'm prepared for any loss that's gonna come. It's just being open minded and also seeing what works and what constantly be losing. Like I already know what be losing. That's why um that breakout on Thursday, yeah, yesterday, that breakout for a sale yesterday, I knew not to take it because me back testing, seeing how many times a breakout run into a 5 minute demand and it loses, I already knew to just, okay, let me not take that breakout for a sale. Let me wait and see if this inverted head and shoulders is going to actually hold up like it usually do with the New York reversal pattern that we talk about all the time. So it's just keep it simple. You like if something is not working, give it some time before you make a decision whether you want to make a tweak. Like I know sometimes people are like, "Oh, I'm on a losing streak. It's time for me to change something." No, give it some time. I'll probably say 2.5 weeks, maybe 3 weeks before you just be like, "Okay, let me just cool it on the breakouts. Let me cool on supply and demand. Let me do something else." Give it some time because the same stuff that you lose on, you're gonna start winning on again in the future. Like I've seen setups like this actually lose before. Like this to come down, hit stop loss, then it breaks out again, and now you gotta get back in again. Stuff like that is going to happen. But yeah, bro, I just try to just keep it simple, man. Like just try to be unbiased every single day. I don't try to overcomplicate it because once you start thinking too hard, you trying not to lose, and that's how you lose. Like you know what I'm saying? Like just keep it simple, bro. Keep it simple. All right, I think that was it. All right, let's go ahead and go to the next person. We got Elijah right here.
Hey, what's going on, Dog? How you doing, man?
Yo, what's good?
All right, so I got one setup on today on gold at 7:35 a.m.
All right, let's go to gold. All right. You said 7:35.
Yep,
Okay.
it's that liquidity grab right there
For sale?
for a buy.
7:30?
Wait, hold on.
Am I tripping? Oh, okay.
Yep.
Okay, so you used this week. Okay. All right. And you got in off of the break of the candle?
I didn't get in, but I was thinking about it. I was pretty good off of this week's profit. I was just curious if you would take something like that.
Yeah. Yeah.
Oh,
Like
okay.
without a doubt. I haven't taken liquidity grabs in a while because supply and demand and breakouts been doing so good. But I still see liquidity grabs to this day. My only issue with liquidity grabs is that, it works until the EMA just decides to just not break through. So like for this instance, like you would get in off of a breakout for I mean not breakout, but breaking a candle right here for a buy. You put your
Mhm.
stop loss underneath that wick. It chops around on the 200 EMA, breaks above, and then stops at the 50 SMA. Then comes back down again, and then rips back up. And then they do this, which this happens a lot with liquidity grabs. It comes back again. I like this is a common thing with liquidity grabs is that sometimes you will become liquidity after they grab liquidity, and it's just like that doesn't make sense, but the market likes to do that, and it's really because support and resistance is where liquidity lies. So you have to be careful trading liquidity grabs because not only did they take liquidity right here, but now you are liquidity. So they will come and get you at some point. So you have to be careful. Um, but I will take this too. Like, let's just say the supply and demand starts slowing down. I will start trading breaking the candle liquidity grabs. Like these aren't that bad. These aren't like in 2026, these are not my favorite anymore. I used to like these back in 2022, 2023 with liquidity grabs, but I really don't use it anymore. I still see it works out every now and then, but I'm mainly supply and demand breakouts in 2026 for sure.
Got you. And I also had to ask, I know we're always talking about scaled down zones.
Hmm.
If you see a liquidity grab on the 5 minute, the 15, and the 1 hour, does that give you more confidence in the liquidity grab, or do you just pay attention to the 5 minute?
No, no, no. So if I see a 1 hour liquidity grab,
Mhm.
I will use that as added confluence on whatever setup that I'm using. So let's just say the 1 hour is doing a bullish liquidity graph for a buy. And then
Mhm.
I go down to the 5 minute and it looked like a 5 minute demand is happening right after it. I'm taking that setup. Now, am I looking for another 5 minute liquidity grab for a buy? No. Okay, absolutely not. I'm not. But if it does happen, yeah, I may take a buy, but I'm waiting for that breakout. So yes, I will look for higher time frame liquidity grabs as added confluence for my 5 minute setups. Yeah. Yep.
Gotcha. And then last question. So I know you don't trade liquidity grabs anymore, but if you did, would you cut your loss?
You said would I do what? I didn't catch that last part.
Would you cut your losses, or is it just stop loss or TP?
Yeah, I'm cutting losses. Yeah, I'm definitely cutting losses. I feel like the only way I would want to cut loss on a liquidity grab is if my zone have multiple candles closing past my zone. So let me go ahead and find a liquidity grab real quick, and I'll show you exactly what I'm talking about because I don't want to see candles closing past my zone. So like for instance, this right here, that's a liquidity grab. But let's just say, let's replay this right here. Let's just say that a couple of bearish candles, because our stop loss will go right here. Let's just say some bearish candles start printing, it's going down, and then it start closing right here or closing past this area because this is the lowest wick that swing created to create that liquidity grab. Once I
Mhm.
get a body of the candle start closing past that area, I will probably look to close because most likely the liquidity grab is not holding that well. But also we got to take into account the EMAs. So EMAs right here don't look as perfect, but it's still one. But you still have to be careful because sometimes they would do what? Go to the 13 and then go right back down to make a new low. So yeah, I definitely just like cutting losses with liquidity grabs. You definitely have to practice because again, I liquidity grabs tend to be in drawdown instantly before they start breaking up. That's why I feel like if you want to mix liquidity grabs, mix it in with breakouts. So like for instance, this we got a double bottom. I'm pretty sure this is probably divergence off the RSI or whatever. It's probably divergence. And then instead of looking for a break of the candle right here or trying to, okay, where should I get in off of this liquidity grab? Just wait for a breakout off the 13 MA. Just wait for that. Now you're mixing a breakout with liquidity grabs. So yes, you
Mhm.
can still look for liquidity grabs, but if you want a safer entry, I would look for the breakout because you want to get in when the momentum is happening. You don't want to be stalling out underneath the 13 MA. And what if they don't break back above the 13 MA? Now they about to make a new low. Now stop loss hit. So you got to be careful with liquidity grabs for sure.
Gotcha, gotcha. Oh, and then I know I said last question, but I was watching some old webinars. Do is it still valid to take breaks of structure if all that broke was like a wick?
Yeah, absolutely. Yeah.
Okay, gotcha. All
Hmm.
right. Thank you.
Yep. All right. Let's go to Dwayne.
Hey, Doyle, how you doing?
Yo, what's good?
Can you go to gold on Tuesday,
Hold on, Tuesday.
Tuesday morning at 3:10?
Three, 3:15, three
Yes.
ten.
Yes, yeah, that one.
Okay, so you took a supply setup.
I did.
Okay, so this thing definitely instant loss for sure. Let's go to the higher time frame and see what happened. You took this setup.
I did.
Okay, let's go ahead and
I was looking at a market structure and it looks like it didn't break the that higher high right there, and it had a minor breaker structure. So thought it
yeah,
was going to be a good.
yeah. So again, you're trading towards the 200 MA. So you are expecting this to be a correction towards the 200 MA. Now, looking at this, the breaker structure, yes, we have a little minor breaker structure right here. It's not the best, but the EMAs did curl downward, so that makes sense on why you probably wanted to go for a sale. It
Right.
also looked like it came off of a 5 minute supply over here as well. So, yeah, it looks pretty good, but we got to hope that we are really on a correction because the 200 EMA is at the bottom, so we are trading counter trend. Let's go to the 15 minute. The 15 minute look completely bullish. You're definitely going counter trend for sure, 110%. Let's go to the 1 hour. Yeah, the 1 hour is super, super bullish. And you're trading gold too. So again, what did I win on? I won on buying opportunities this week. Just straight up buying opportunities. I don't think I did I take a sell this week? Let me check do it. Let me see. I need to see. Did I take any sales this week? I don't like I just want to just make sure. Okay. Buys, buys, buys. Yes, I took only buys this week. Why? Because gold is a bullish instrument. I'm telling you right now, 2026, gold is going to go up by December 2026. So until we actually go into a completely bear market for metals, I'm going to be looking for buying opportunities. Can I make money going for sales? Yes. Is it going to get runners? I don't know, but buying opportunities, I'm all for it. So the setup itself is not the best. This is counter trend. We got a minor breaker structure. EMAs did start to curl downwards, but they wasn't ready to stop. They was completely done right there. So my only advice is just be careful going towards 200 EMA. It's very tricky to know when to go towards the 200 EMA. Like this is a small break of structure, but like, is it really a break of structure when the 15-minute looks like this? The 15 minutes still looks bullish, even though that looked kind of like a break of structure on the 5 minute. So again, you have to be careful when you're going against the trend. When going against the trend, yeah, the 5 minute supply can look good, but that doesn't mean that it's going to work out, especially when the overall trend for that day is bullish. So yeah, the 5 minute curl down, but the higher time frame is still saying I'm ready to go up because I'm trading above the 13 MA on the 1 hour. So yeah, you gotta just be careful. Sometimes it's okay to just sit out. Like I feel like when we get days where gold does that little 13 and 50 cross, and like this right here, for instance, I've lost so many times off of a breakout like this. Now look, it actually won this time, but this breakout right here, this next candle will just continue down and go straight to the 200 EMA. Stuff like that will happen. But me personally, I feel like buying gold is way more likely to work out than selling gold, especially when they're staying above the 13 MA for longer periods of time. Like look at how long they stayed above the 13 MA over here versus this little small, little short-term pullback. So we should know that overall the trend is still bullish. The only time we know that the trend is bearish is when we're trading underneath the 200 EMA. So take that to account. Yes, yesterday we went towards the 200 EMA, but that was on a full reversal day. Like we took a buy going towards the 200 EMA, and it ended up being a full reversal day. Yes, it's hard to catch those, but those are high risk because we're still going against the trend. So yeah, just be careful when you're trading towards the 200 EMA because stuff like this is going to happen too. Like it looked good, the breaker structure is not the best. The higher time frame looked bullish, 15-minute look bullish, 1 hour look bullish, but the 5 minute is the only thing that's creating something. Like these are just C setups, C plus setups. Like they're not like crazy confluence. It's just a 5 minute setup happening. So like every time when you see a 5 minute setup just happening and it got no confluence, you need to be like, all right, well, I don't know about this setup. Like it's okay, but it don't have 15-minute mixed with it, 1 hour ain't mixed with it, or the 4 hour. Because I get excited when I get a 15-minute demand with my breakout. Like I get excited when I see a 1 hour demand with a breakout, or even a 5 minute demand with a breakout. Like anything that's going to add to it is something that I want to see. When it's just simply just a 5 minute setup and it's just sitting there by itself and nothing else is just saying that it want like break out or break the candle, just it just look kind of okay. I'd be kind of on both sides of the fence. But again, I'm not gonna just be afraid to lose because we still got to find out because even ugly setups can win. So just be careful with counter trend. That's just my 2 cents on that. Just be careful for sure.
Got you. Uh, if you can go to gold again on, I took this setup today, I'm sorry, Friday at 6:45.
6:45.
It was
A breakout.
a demand.
Oh, a demand. Okay.
Mhm.
So this one right here. Okay. Is that the one? Do I have it right?
Yes. Yeah,
Okay.
you got it.
Okay. And you got it off of what breakout candle? The
As soon as it broke that candle, I entered at um
645 or 650?
6:45.
Okay.
6:45.
Okay. All right. So this is on NFP day. Okay. So yeah, today was NFP day. This setup in particular, you are going with the trend. This is dangerous because this is just straight up barcode action right here. Like, you got to be careful with this type of price action. I really don't like to use breakouts when the price action is looking like this because you're just trading consolidation. So, like, you see how, this breakout over here lost, this one won, but then this one lost, this one lost, this one lost. So like when I keep seeing breakouts lose, it's kind of dangerous to just try to keep trying because you know we don't know when a breakout is going to end. We don't know whichever one is going to win. I just don't like to see stuff like this because breakouts perform horribly. So if would I take this setup? I probably wouldn't. I'm not gonna lie. And I only say I probably wouldn't only because I just don't like just the sideways motion. That's just pretty much it. It did hold on this little demand right here. It wicked it. No candles closed inside of the zone. That's good. The breakout structure is really not there. Like I really wouldn't count this as like a pivotal swing. This just look like consolidation. Like this look like resistance. This look
Mm.
like support right here. And we're just kind of just going back and forth ping ponging. And then they finally went up, took out those traders, and then finally took out these traders, and then went right back up to take out these traders right there. So I just feel like this is just like bad price action in my opinion. But this setup in particular, it did work out. It just be careful using breakouts or even trying to just even trace supply and demand in these type of market conditions because I've not seen some setups like this just fake out immediately lose. So yeah, just be careful for sure.
Okay.
Yeah.
All right. That's all I got, man.
All right. All right. So what time is it? 7 o'clock. All right. So if I couldn't get to you, please DM me. I'm gonna answer my DMs on Sunday. I already have a lot of DMs right now. Yeah, I'm kind of backed up. I'm not gonna hold you, so you're gonna have to give me some time. But yeah, let me put the chat back up because I haven't been able to see it. But yeah, so like I said, overall, this was a great week, undefeated so far in 2026. Let's try to continue this going into the second week of January. Good stuff for people that actually got on the live call. Listen, the last webinar we had was this past Sunday, and I was like, listen, it's time to get serious. And then we go 3-0. Like, we're not playing around. Like, we're trying to get results. People got stuff that they want to accomplish. I got stuff that I'm trying to get. Like, we have to stay focused. You feel what I'm saying? We do have another call, 8:30 Monday. Uh, Let me actually check news. I forgot. Let me see what news is talking about for next week because we got to keep this going. Monday, no news. Tuesday, we have news at 8:30 and some medium impact news at 10. I'm not trading on Wednesday. We got some news at 8:30 at Thursday, and I'm I'm gonna gate like I may still look at it on Friday, but I'm not gonna place any trades because this is like the first Friday where there's not no NFP. So I just want to just see like what are they going to do. But yeah, it's definitely I'm probably just gonna trade Monday, Tuesday, and Thursday again, just like this week, and just watch Friday because we don't know if Friday is gonna be great. Like we really don't. Are you gonna be doing live trading next week? Yes. Monday, Tuesday, and Thursday, 8:30. Show up on time, please. Yeah. So, all right, y'all. I'll see y'all on Monday. Good stuff this week. If you're brand new, if you just joined, please watch the webinars. Please turn in the homework. Check the homework channel so I can see that you know what you're doing. I check the homework. So if you get a homework wrong, then you don't know what you're doing. But if you get it right, then you know what you're doing. So other than that, it's a good week. I'll see y'all on Monday, man. Have a good weekend. I'm out, y'all. Peace.